The strategy that the government has sort of adopted in terms of privatization and disinvestment, and using those proceeds to essentially channelize into investment, into infrastructure investment, does appear to be the right strategy. So I would say, we clearly need to leverage on our strengths as a country in terms of the huge consumption potential that we have, the ability to actually take advantage of the relocation of global value chains. So, or even on the services side of the economy, there's a lot of scope in terms of digital penetration. A lot of scope on food processing, new technology, new sectors, green tech. So a lot of these new growth drivers where we should also look at in terms of making our growth cycle more durable and leveraging on our own strengths, basically. There's also the need to allocate more on health because, the vaccination, and then we'll have a booster program. So clearly there cannot be a compromise on this. But at the same time, the world is expected to move from pandemic to endemic over the next, 12 months or, a certain time period. And therefore, there are a couple of things that become important from every country's standpoint. Unlike US, it does appear that a lot of the inflation is more supply side, but we are seeing greater signs of the supply side cost push inflation also getting passed on to consumer, despite demand conditions being okay-ish, I would say, because even within consumption demand, there's a clear bifurcation in terms of demand from, let's say, the rural economy versus the urban economy. So it's a clear bifurcated growth that we are seeing. So the bottom line is India has seen higher inflation despite, a big growth hit. With the main risk, therefore, we see for India is essentially tolerating inflation, high inflation for too long in order to support growth should not lead to a situation where this triggers a more supply side, elevated inflationary cycle, even though it's not sort of demand driven right now. So our own assessment is, it was definitely the right strategy to sort of overlook inflation to support growth. But as economies are learning to live with the pandemic, with the virus, central banks also need to internalize the uncertainty around the pandemic. And going forward, the central bank, and particularly in the case of the RBI, our view is that they need to start focusing on ensuring that inflation does not become too elevated, because if you look at the details of inflation, a lot of the sticky components are actually still quite elevated, and that's what's driving inflation. Import bill picking up, current account deficit again on a widening path. So these are some initial signs, and gold imports that are picking up. So these are some initial signs that do suggest that central bank needs to start focusing on inflation. The focus essentially, ultimately fiscal has to be counter-cyclical. Yeah. So let's say if growth does go into a virtuous boom, as we are targeting, then there is a need for the fiscal consolidation process to continue. and to ensure that elevated levels of government spending does not crowd out private investment, because if indeed there is an investment boom, then the demand for funding will be quite high. So we cannot continue to have a large share of government if that were the case. So yes, in that case, we would need to go down the path of fiscal consolidation. There is an expectation, this announcement, of course, the index inclusion announcement will be done by the index providers. What the government needs to essentially do is clear all the pending hurdles which are preventing the index providers from, adding India to the indices. And one of the conditions there is with respect to euro clearability and essentially exempting the euro clear settlements from capital gains tax. So an announcement in that context is what is expected in the budget. The one-time inflow, as India's weight goes up in these different indices. Beyond that, if you're looking at it from a more longer-term perspective and not just the period of inclusion perspective, this is clearly positive in the sense that you are getting, more variety and diverse set of investors to come in and into the bond market, into the government bond market. It's clearly giving banks, more leeway to focus on credit and therefore the ability perhaps to lower the SLR could be there. I mean, I'm just saying it's, there are potential other considerations. Also, index inclusion is a carrot and stick.
Yeah.
So, while we are looking at the carrot in terms of inflows, it also does make, to that extent, inflows more susceptible to global risk conditions and, emerging economies which have weak fundamentals also tend to see the other side of the stick. So in a way, it's a carrot right now and a stick over the medium term to ensure we keep focused on having sound macroeconomic fundamentals.